Hi guys, this is a video about a month or year of backtest in a pair with Euro USD. And I just made this strategy that you saw in the video before, and I already did 2 months in a pair backtesting Euro USD. And I will explain the table first, and then we will saw in the video before, and I already did 2 months of backtesting. So I'm taking I will explain the table first, and then we will jump in because I think I need to change something about the way I test my strategies. I'm taking an unconventional what I'm going to do. Take on backtest pair because my time. I think I need to change something about the way I test my strategies. All trade will be a one-to-one. What I'm going to reward. I will take my pair because my time. I am testing and every single levels. All trade will be a one-to-one risk to reward. If I go right here, because I am testing every single level I can test. So, for example, a nice level to try. If I go right here, this one. So my level, let's see, usually I can get 75 percentile. Right here, a nice level to try this. We enter there, this one. So my level, stop like this, usually is the on the 75 percentile, and that right here, and okay, we enter there. In this test, stop like I want to see on the one all of it 103, and so that take profit right here. If you go right here, and in this test, I want to get the Fibonacci back all of it and search for example. If you go right here, and we get structure the Fibonacci example, so and search for this one. Nice looking. Let's see. Structure a little bit. Make the example. Okay. So this one right here, just to make this the example clear. Here, this is my range, right? So this is a fib I created. So this one every here. Single level example with 0.5 here. This is my range, right? This is a fib I created. Difference every between them. Single level 0.5, 0.55, 0.5. This 0.773 is because when I put my stop loss difference between 1.03, so 0.5, 0.55, below 6 and so on. Low in this case. This 0.773 is because when I put my stop loss on the risk to reward 1.03, so a little bit below the I see that low price in this case. I want to see how often price reaches my 75% and when how often price doesn't reach my 75%. I see that price. I want to see how often the last price reaches my 75% and when how often of price doesn't reach my 75%. I saw that the 75 percentile in the last 2 month trade, 2 years, 25 2 pairs, 0.51 year of backtest. I saw that the 75 percentile risk to reward trades have a 25.58%. We rate the golden 2.68 is this one right here, risk to reward, so the 60 percentile. So meanwhile, this one, the golden zone, in this zone I take right most here. Of my trade, so and most of that trade 60% winner because I have a win rate of 53.86%. This is the zone I take most of my trade, and most of that trade are winner because I have a win rate of 53. The expectancy 86% in trading. This is the highest expectancy is in this zone. Basically, the ratio between win rate in trading, the difference between the win rate times the average win and the loss rate. Basically, the ratio between win rate ranging from the difference between the win rate can range times the average win and the loss rate. Put it into perspective. If I change this value to multiply ranging from by my risk, which is 1,000 range per trade, but we see that on average I can perspective. If I change this $96 by my risk, which is 1,000 per trade, what we need to do is to increase on average I can expect $0.96 to at least 0.2,
on average.
0.5. 0.5
What we
is
need to do is to
it
increase
means
like
that
$500 per trade.
0.096
very
to
good.
at least 0.2,
This
0.5.
table
0.5
right here
will
is the,
also account
it means
for
like
the
$500
$500
per
because
trade.
for now
So
I'm
it's
only
very
targeting
the maximum
this
of
table
the,
right here
of
will
the
also
range.
account for
But if
the
you take
take into
profit,
account
because
for now
the
I'm only targeting
quartile the
range
maximum of the
theory
range. But if we take into account
minus 0.25
quartile,
this right
range
here
is a
theory,
a target.
this one right here is a target, and this one
minus
right here is a 25. And so
This
my
right
risk
here is
reward
a
usually can
target.
go
This
a
one
lot
right here
higher
is a
than
target.
and
Usually
this one right here
is a
and
target.
I'm searching the
And
balance
so
between
my risk reward
usually
can
win rate and risk to reward
go a lot
so I'm,
higher than
for
I
example
usually thought.
after
we will see
and
a lot
I'm
of
searching
example,
the
but for
balance
now,
between
if I take TP,
win rate and
which
risk to
range
reward.
did it touch?
So I'm
For example, in this case, after we will see a lot of examples,
the
but for now,
773 range,
if I take
and
TP,
then stopped,
it didn't.
which
not,
range
it
did
did not
not
reach the 80, 85.
for example
and
in this
90.
case
it
and
it
in
went
this TP
to
in
the
particular,
773
it did not
range
reach
and
any
then
of the
stopped.
target.
It didn't.
So for example,
it
if
did
you
not
take
reach
a
the
look
80,
on the
85,
trade,
and 90.
and
You
in
can
this
see
TP in particular,
if
it did not
loads,
reach any of the target. So for example, if you
while
take
it
loading
on the
trade,
I will make you look. We can
so
see
we will see that
if
it reaches
the highest of the candle,
meanwhile
but
it
not
loading,
reach my profit
I will
target.
in this
make you look.
example right
So
here,
we
meanwhile
will
see that it reached
the highest
right
of the candle,
it reached
but not reach
all
my
three of
profit
them.
target.
So
So it's
in this example
good
right
risk to
here,
reward
meanwhile
chance.
so
This
for
one
example
right here,
with
it reached
0.25%
so it's
take profit,
good
I
risk
have
to
a
reward
highest
chance.
RR,
highest
so
risk
for
to reward
example
ratio,
but
with a
0.25%
low win rate
take
because
profit,
it's
I have
harder
a highest
to reach that
RR,
level than
highest
this,
risk to reward ratio,
reach the
but
the
lowest
of the candle.
a low
win
but
rate
we can see
because
that
it's
the
harder to
expectancy
reach
is a
that
lot
level
higher than the previous one.
reach
So I'm
the
trying
highest
to
of the candle.
go with
But
this
we
strategy
can see
right
that
here. The expectancy is a lot higher than the previous
right
one.
here.
So
But
I'm trying
for example,
to
if
go
you take a look
with
at this
the
strategy right
50
here,
percentile,
the
it has a high
25
expectancy
percentile
and a
trade
highest
right
and
here.
a higher win
But
rate.
for
So
example,
it's
if you
good
take a look at
because
the
I want a higher
percentile
win rate
it
because
has a
when
high
you trade the swing
and a
you
highest
may take
and
like
a higher
20
win
trade
rate.
per month, so
Maybe
it's good
something
like that
because I want
and
a higher
if you
win
got
rate because
into a
when you
strict loss
trade the swing
you may take
allow strict
like
it could
20
go
trade per
a
month
lot
maybe something like
on,
that.
so
And
months
if you
months.
got into
So I
a
want
strict
my
loss
win
it
rate to
could,
be high because I want
allow
to
strict
control my
it
emotion
could
better.
go a lot. So after I
On,
explained
so
all of
months
this,
and months.
I hope you
So I
guys
want my
win rate to be
understood.
high because I want
If
to
not, control my emotion
don't worry
better.
because we will try in
So
practice and
after I
I will
explained
make
all of
you
this,
see how I trade.
I hope
this
you
guys
understood.
For
If
the
not,
next section, I
don't
will
worry
be
because
Euro
we will
USD
try
in practice
Euro
and I will
USD.
make you see how I trade this. So with this strategy,
So
for the next section, I
starting
will
balance
be
always
USD,
1000,
will do
100,000.
Euro USD. So with this strategy, this layout, we'll have spread and
starting
commission.
balance always 1000,
And the start
100,000.
day will be the 1st of January 2024 and the last day
We'll
will
have
spread and commission.
31st
And the start
of
day
December
will be the
2024.
1st of January 2024 and the
So
last
let's
day will be the 31st of December 2024.
Okay.
Let's see
So
where
let's
price
go.
goes. Okay, so it broke so that little let's see where price
high.
goes. We want to see a little bit more of it broke the movement before entering. exactly
higher high, because we were
want
at the
to
bottom
see a
of the
little
range
bit more of the movement before
it's
entering,
looking like
it's consolidating a little bit
because we
not
were
really
at the
great.
bottom of the range.
Okay, here it's a valid
So
trade.
we have a
Looking
range.
like it's consolidating a little
We
bit.
will put the trade only on the
Not
15
really great,
percentile because
okay, here
it's the lowest
it's a valid trade.
we have a range
Entry level, so I will take all the
we will
trade I
put
can.
the trade only on the
And
15
we'll see if
percentile
we
because
got tucked in.
it's the lowest
And
entry level.
so I will take all the trade I can.
Let's see.
And
we'll
we'll
see
see
if
if
profit.
we got tucked
Good.
in.
So I will
And
mark the 25 percentile.
Let's see.
I will take
and we get a take profit.
Screenshot of this.
I will go
So I
here.
will mark the 25 percentile. We entered on the
I will take
6 a.m.
18 of
January. Screenshot of this.
I will go here. Okay, so
We entered on the 6 a.m.
Let's keep
18
on
of
going.
January.
let me create some
so
of these. Okay, let's keep on going. Let me create some of these. Let me see if I can. Okay, why my rows are like this? I
Let's
don't
see if
have.
I can.
So Euro USD. Why my rows
Do I have a filter
are
enabled?
like this?
Yeah.
I don't have. So Euro USD. So here Euro USD. 6 a.m.
Do I have a
the
filter
18
enabled?
of
Yeah.
January 2024.
Okay.
I will hide this
So
column right here.
yeah.
Euro USD.
Faster input.
6 a.m. the
Because
18 of January 2024. I will
So it's a
hide
TP,
this column right here.
1% of risk.
It was a
faster
short
input.
position and it reached
Because
the 55
don't
level
use that.
before going to the,
So it's a TP short side.
1% of risk. Put the screenshot. It was a short
is
position,
a trading strategy
reached
following
the 55 level
rule.
before.
It's a
going
TP
to
for the
the
55 short side.
and for the rest of it, it's
put
the
not
screenshot.
taken.
It is a trading strategy following.
It reached
Rule, the 15
TP
level
for the 55,
not quite the
and
rest.
for the rest of it,
see if
not
it
taken.
can go to that level.
It reached
The 15
we have
level,
another trade here,
not quite the rest.
another range.
See if it
one.
can goes. It can go to that level.
Right.
We have another trade here.
Let's see.
Another range, short one. Okay, this is a stop loss. All right.
Let's see.
So usually backtesting a year, okay,
Does
this is
take
a
like
stop loss. 6 a.m. 24th. So usually it usually takes like an hour.
So
Does take like it's the third
6 a.m.
third pair I'm
24th
backtesting today.
So
it usually takes like an
I'm
hour.
a little bit tired.
So
But
you know it's
in this case, the stop
third
loss did
third
affect
pair
all
I'm
of the entry
backtesting
because
today.
obviously it reached
I'm a little bit
all
tired.
levels.
But
So
you know,
okay.
in this case, the stop loss
Let's see
did
how
affect
price
all of
reacts,
the entry.
because
We have another range.
obviously it reached all levels.
So a long
okay.
position. Let's see how price reacts. We have another range. We
So
tucked in a long position and we have a stop loss.
Yeah.
Okay. So we tucked in the 22 and we have
January
at 22 stop loss.
Yeah.
So we tucked in the 24th of January at
Oh,
22.
I forgot. I
misspelled. Sorry. It was a long position. It was going accordingly to the plan.
I
misspelled.
Sorry.
And it is a stop loss for everybody. It was a long position.
Good.
It was going
Let's see how it
accordingly
goes.
to the plan. And it is a
Okay.
stop loss.
So
So
we
block structure.
Good.
we did not quite broke this low, so we'll keep going. Okay, so we broke structure. This is too impulsive because of NFP. We did not quite trade it this low, so we'll keep going. Okay, so this is too impulsive because of NFP. Remember, I'm only looking forward to small peripheral structure. Okay, so we are in an uptrend. Remember, I'm only looking forward to this is my range. Small peripheral structure. Let's see if I can. Okay, so we have a retracement to it. This is my range. Let's see if I can. Alright, get into it. Yeah. Stop loss. Alright. I entered on the 14 o'clock, 15th of February. Yeah. Stop loss. I entered on the 14 o'clock, 15th of February. It was a short position. Yes. Stop loss. Alright. It was a short position. Yes. Stop loss. This is a range. Alright. Let's see. This is a range. Okay. We are tucked in. This is a take profit with all three take profits. Okay. So gonna do like this. We are tucked in. This is a take profit here with all three take profits in on the 21st of February. Do like this at 6 a.m. here. I got tucked in on the 21st of February at 6 a.m. long. So in this case we reached the level of 60. Okay, so the 60 level long we take into account. The other one in this case we reached. I'm memorizing the order, so I do not look up every time. We have all three take the other one taken. Will be not taken. Good. I'm memorizing the order, so I do not look up every time. We already have all three take my 50%, so I will put a stop order on the 50%. Here we have another range into account right here. In the meanwhile, the loss. We already surpassed my 50%, so I will put a stop order on the stop order, and I will take into account right here. Okay, we are in loss in case. Okay, so it's a little stop order active. Okay, we are in. What a horrible range, but we did get a little bit take profit. In this case, we reached the 90 level. We got tucked in on the 22nd of February. Horrible range, but we did get a take profit. In this case, we reached the 90 level. We got tucked in on the 22nd of February. It's following the plan. This is the key profit. And the take profit goes to orange with this screenshot. It's following the plan. 3 take profits. We got tucked in the take profit goes to oranges with 3 M. Okay, 3 take profits. We got tucked in on the 14 behaves. This is another range. Okay, good. I will put the stop order right here. Let's see how it behaves. This is another range. Okay, I will put the and it's stop order right here. Okay, so we'll go and it is 10 a.m. 7th of March. Okay, so I'm really trying my best to keep you guys entertained, but 10 a.m. 7th of March, it's a little bit difficult because usually I'm really trying my best to keep you guys entertained, and also I'm trying to a little bit difficult
because
the most out of my
usually
data, so
I
try
trade
to
with
concentrate
music
on and
try
how
to
to music
manage
all of these
and
inputs.
also I'm trying
But
to
I'm trying really
get
my best. The
so
most
all
out of my
three
data, so
take
I'm
profit
trying
taken.
to concentrate on how
Let's see
to
how it
manage
behaves.
all of these input.
It's going
But
up.
I'm trying really my best.
Rotating. So
All
one thing
three
I noticed
take
is
profit
that
taken. With the 50%, you
behaves.
need to draw fib really
It's
fast.
going up and it's
At the first sign of
so
the rejection,
one thing I
because
noticed
if not,
is that
you will lose the trade. With the 50%
So there's a
you need
limit.
to draw fib really fast. In this
At the
case,
first sign of
I
the
will
rejection,
move, because if not, you will lose the trade, because it didn't really break
there's
a limit.
structure.
Yeah, it in this case
It broke structure.
I will
but
move, not as I would like to, because it didn't
was
really break
too
structure.
slow.
Yeah,
So I'm going into this trade.
it broke structure.
It got tucked
but
in.
not as I would like to.
And it was too slow.
Loss. So I'm going into this
so,
trade. We got
Stop
stop loss.
loss. Let's see if
And it is
okay.
stop loss.
So stop loss.
We got tucked in on the
so, yeah.
11 of March
Stop loss.
at 13.
Let's see if okay. So stop loss.
Nice. We got tucked in on the 11 of
long
March
position
at 13. It was according to plan, and it is a stop loss for all levels. It was a long position. We go on. It was according to plan, and it is a stop
This is a
loss
risk
for all
range,
levels.
but I will take it.
We go on.
So it's a limit order. This is a risk range, but I will take it. So it's a limit order.
Let's see, we got tucked in
Like this.
and closed out. So let me take a screenshot. We got tucked in on the 20th of March. We got tucked in and closed out. So let me take a screenshot. We got tucked in on the
I'm hoping, guys,
20th of March
of 5 a.m.
I'm following the strategy consistently, because I'm worried that maybe sometimes I use some ranges and sometimes I don't use that ranges, but consistently.
It's
Because I'm worried that
trading
maybe
is discretion.
sometimes
So
I use some ranges
I can't
and
make
sometimes I
miracles
don't use
about
the
it.
ranges.
I want to improve
as much as I can.
But trading is discretion.
The only thing
So
that I can improve on is
I can't
how many
make
trade I
miracles
can take.
about it.
So I want to
How many
improve
trade I
as
took
much as I can.
taken. So
But the only thing I can do right
the
now
only thing
is to
that I
follow
can
the
improve on
strategy
is how
as
many
I
trade I can
as I
take.
can,
So
the
how
best
many
time
trade I
and
took
the best
I
way
taken.
as I
So
can.
And
The only
then,
thing I can do right now is to follow the strategy
see the
as
results.
I can.
They want
at
March
the best time
and
the best way as I can.
-1
and then
percent stop loss.
see
What
the
if I
results.
put some music?
They want
Copyright.
March 2024 -1% stop loss. What if I put some music? No copyright. I hope it's not too loud. I hope it's not too loud. Did I journal it? Okay. Oh. It was a long position. This is the screenshot. Yes. Stop loss. All level. Did I journal it? Okay. Oh. It was a long position. This is the
let's keep on
screenshot.
going.
Yes. Stop loss. Now this is my range. Okay. So let's keep on going. This is my range. Okay. Like this. I'm having my coffee right here, so okay. Okay, range is invalid. I'm having my coffee right here, so okay, range is invalid. Okay, we have I don't like it a lot. I guess I should take it to be the more consistent possible.
I don't like it a lot.
Let's see.
I guess
It's
I can
a
limit order.
I should
Take it to be the more consistent possible. Got tucked in and take and stop loss. It's a limit order. Stop loss. Stop order. 1 p.m. 2 of April. Got tucked in and take and stop loss. So we got tucked in at
Man, now we have a losing
1 p.m. Right here. 2 of April. Was a short position.
Man, now we have a losing streak.
Right here. Was a short position. Okay, let's see. This one is my range. I don't like broader ranges because usually I find it very difficult to take profit and time consuming. But you know, this is I don't like broader ranges because usually I find it very difficult to take profit and time consuming. And it is this is the strategy. So and not take profits. Get tucked in. We got tucked in on the 55 and it is TP. We got tucked in on take profits. 11 p.m. So we got tucked in on the 55. 1 p.m. 5 of April. We got tucked in on take profit. 11 p.m. 5 of April. 1 p.m. 5 of April. It is a take profit. Thing is, so the most here is that it's not going very deep with the retracement, so it's thing is so the most here is that retracement. Usually it's not going very deep with the retracement, so it's thing at the 50% retracement. Usually high reality here. Okay, so we have a retracement. Okay, we put here high reality here. Got tucked in. Okay, take profit, all three of them. So good. Got tucked in. Let's see. No, this is not a take profit. Take profit, all three of them. Alpha so, peep, good. I don't think so. Let's see if it reaches it. Yeah. Let's see, so now this is not a take profit because we got tucked in on Alpha Peep 18 of April 17. So. Let's see if it reaches it. Yeah. So we will copy this. We got tucked in on the 18 of April 17. Take profit. Goes a long position. So we got till the 90 range. All three take profit. So it was a long position. I'm thinking to backtest 20 so we got and then the 90 range which whichever 10 are the best right here, and then I'm thinking to backtest the 20 pair count and then see before trying the demo count whichever 10 are the best backtest 20 and pair then keep 10 of them starting like with the 20 trades count a month before so trying with demo count. And then see which back range 20 pair to trade on 10 of them. It's like with 20 trades a month. So I'm happy with the ranges cancelled. And then see which range is the best to trade would on. Have been a trade if it with this strategy so impulsive. So the range is cancelled because this is a very corrective range. This would have been a trade if it wasn't so impulsive. See how it goes. This is a very corrective range. Okay, so we have a range. Okay, so we have a range. Let's see. Okay, we got tucked in. Let's see. Take profit. All three profit. Okay, we got tucked in. Okay. take profit in on the 8th of May. All three first profit taken 1 a.m. Tucked in on the 8th of May. First 1 a.m. Okay. So we reached the 60 range. Okay. So we reached. I hope you guys find interesting this way of backtest. The 60 range. I found it interesting. So I hope it's. I hope you guys find interesting. Maybe I'm a bit of value for this because I found it interesting. So I hope it's. This is another. Maybe I'm a bit of value for you. This is another range. We got tucked in. That's why I don't usually like to trade these long ranges, because it can always go short, and then that's why short. I don't usually like to trade these long ranges. In this case, it can always seems like short, and then all over the place. Let's see what happened here. TP. This is a trade. In this case, so I will keep into account this one. It's going all over the place, and I will keep it. TP. Journal it. This is a trade. On so I will 22 of May. Keep into account this one, and I will keep it. Journal 9 a.m. So I got tucked in on the 22 of May. This is a take profit at long 9 a.m. And the range was till the 70. This is a take profit. Long. In reality we reached the 80 range, and that range because was the trade is invalid only if it went above the zero line. So in reality we reached I would have taken the limit on, because even if it trade is invalid only if it went above the 80 range zero line. Last one. So we have 85. I would have taken the limit. Reached the first take profit, even if it reached like this was so. Reached the 80 range. So we have this line right here. So we have 85 and 90. This is a trade. The first take profit, right? This one was right here. Reached. So we have this line right here. This trade. This was a trade too. This is a trade. I didn't have close position or risk-free position right here. Let's take into account that this trade, my target was a trade with my price reaches I didn't have close position or I will put free break even. So let's take into account that when my target with my price reaches this level, the zero level, I will put at break even. So stop order. This is a things to keep in mind. So right here like this, and stop loss. Stop order. Stop loss. So I will blink. Got tucked in, and I got tucked in at 9 a.m. of 4th of June. Is a stop loss. So I will blink. I got tucked in at 9 a.m. of 4th of June. There's a long position. There's a long position. And the target was reached only the 15 percentile. And the target was in this case only the 15 percentile. I don't know where to look, if I took this range or the other one range, but in this case I will look at the chart. I don't know where we reached the to look if I would took this range right or here. The other one range we liquidated, so I will look at the chart, and we have all of this liquidity good supply zone right here. So I'm going we liquidated those level, and we have all of this liquidity. I'm not really brightest person on price action in this case. I hope I'm right. I'm not really brightest person on price action, but I hope I'm right. This is a take profit, good. We reached the 70 level, let's see, and all three targets. This is a take profit, good. We reached, I got tucked in on the 70 AM level of June, and all three targets, yeah. I got tucked in on the 9 AM 12 June. The 70 range, so 55, 60, 65 and 70. This one was not taken. All three level was respected. 70 range, so 55, 60, 65 so and 70 range. Let's see this one price is retracing. Yes, all three level it looked like was this respected. Well respected. So we have a new range. Let's see if price is retracing. Yes, it looked like this. Okay, I'm tucked in. It's a little bit slow. We did not exit the trade. And I think it's a stop loss, a little bit slow. We did not exit the trade. Yeah. It was a very long trade, I should have, and I think it's a stop loss. It was a take profit actually, because this was right here. It was a very long trade, I should have. This one was it was a take profit actually. 1.3. So this was right here. And this one was 1.3. So let's keep it at 65, even though it's 22. So it would have been a take profit. At 13, yes. Let's keep it at 65, even though it's 22. Let's would have been to this level. Okay. At because I want 13, to, yes, it would have been. I already knew the price action, but I want to let's screenshot. Let's get back to this level. Okay. I got tucked in on the 13. I already knew the price action, 18 of June. I want to take the screenshot. Well, 18 of June. I got tucked in on the 1 p.m. 18 of June position. Yeah. So this would have take it before. Okay. And no level was position reached. So this would have not been taken. Let's keep on going. And no level was trade reached. In this case right here. Okay. Let's keep on going. This is obviously a trade. In this case right here. Okay. So let's do something like this. This is a take profit. Okay. So let's do 1st of July 1 p.m. This is a take profit. So 1st of July 1 p.m. Okay, so it was a long position. Okay. We reached till the 70 percentile. Okay, so it was a long position. 90, 85, 80, 773. We reached 70% till the 70 percentile. Here all the profit took. So the 90, 85, 80, 773. I'm curious about what is the statistic about it. So profit took count if this range I'm here. Curious about what is the statistic about it. So here count if is true. This range right here. Okay. And then divide it by this one right here. Is true. Sorry, not total trades, but and then
let's
divide
do
it
it
by
like
this, count if total trades. This one, sorry, not total trades, but let's do it like this, count if this one. Okay, so we have a 87% probability of this TP of having a 25 percentile take profit. Okay, so we have a 87% probability of so it seems like they having a 25 percentile and 15 profit is this one right here is 20%. So it seems like they both equal. Okay, so and we have 15% is what on our data. Okay, so we have a problem. Maybe I just did the wrong thing on our data. Okay. Maybe I just did the wrong thing. So let's look. Okay, right. This one, only this one. How much is it? It's 40. So let's look. Obviously, right? Not this one. Only this one. How much is it? Okay. 40. It's 40 by. Sorry if this is not. It's a number. Total win. So 40 divided by 87. Sorry if I look at this. Total win. So 73. Okay. E2. So I did get the calculation wrong. It was 73% for this one. 73. Okay. For the 25% get the calculation wrong. 20% we have 73. 73% for 87. This one probability. For the 25% for the 20% we have 73 and the 15%. So yeah, 87% probability. Right? Seems like this is looking pretty good. So yeah, we have 87% of probability of taking TP and 15% is looking pretty good, which is very good because if we look to the expectancy of this, we have 87% of probability of taking TP and 5 for the 25%, which is very good because if we look while with the 0% expectancy of this, so it's really high. It's 257. Let's see how it goes. 265 for the 25%. With meanwhile with the 0% 130. So let's see how it goes. This is our range. Okay. So invalid range. Okay. So here. Invalid range. Consolidating range. Good. This is my range. 50% and okay, we have a consolidating range. Good. This is my range. Valid range. 50% and so in this case not even the 50 percentile would have been taken. So this is a break of structure. This is my range. This is my entry. So in this case, not even the 50 percentile would have been taken. So limits mean. So this is a break of structure. This is my range. With this one is my entry. It's a stop order. It's a limit. Okay, so limits mean maybe some pips. Okay. We get tagged in this and it's a take profit. It's a stop order. Take profits limit. I will let it play. Maybe some pips. Okay. Okay, so all get tagged in profit. And it's a take profit. The range was only the 15%. I will let it play. The 65 did or the 55. So all three take was profit. Not. And the range was only I got tagged in on the because 15 of the July 65 did or the 55 was not taken. So I got tagged in on the 15th of July 5 AM. In this case no range was taken, so not taken. For level, all three take profit. In this case, no range was taken.
See how price
So
goes.
not taken. So for level, it seems like all take ray tracing. Let me put straight right here.
See how price goes.
So it seems like it's ray tracing. Let me put straight right here. Okay, that was a stop loss. Tucked in on the 18th of July, 5 p.m. Okay, that was a stop loss. 18 tucked in on the 18th of July, 5 p.m. And this was a long position. 18th of July, 24 minus 1%. This it was a long position. Yeah, range. Okay. Range. Safe. Okay. So this is a take profit. Say tucked in on the 1 p.m. 24th July. Okay. So this is a take profit. Tucked in on the take profit 1 p.m. 24th July. With short position. Take profit. So it reached the 60 range. With short position. The other one were not taken. All three level were so it reached the 60 range. Okay. So we are retracing right here. The other one were not taken. All three level were respected. Okay. So we are retracing right here. This is another trade. So in this case it did not reach the 50 percentile. I will close the trade. Update the take profit. So in this case it did not reach the 50 percentile. I will close the trade. Update the take profit. Tucked in. Update the entry and get back link on the 31st of July 9 a.m. Okay. So we are tucked in. It's a really good backtest station. We have a lot of July 9 a.m. I hope it's a really good. It's everything correct. We have a lot of take profits. I don't see any discrepancy of how I trade normally. So this is everything range. 55, 60, 65 and 70. I don't see any discrepancy of how I trade normally. Profit. So this is the 70 range. So now it should 55, 60, 65 and 70. We have another range. All three take profit expected. So a short position. So now it should appear. Yeah, 87, 76. We have another range. We get tucked in a short position and stop loss. So right here. Let's see. We get tucked in. So we have like and stop loss. So a minus one. So 1% stop loss. It was a short position. Let's see. So we have like this. So a minus one ranges. 1% stop loss. It was a short position. The 2nd of August. 5 a.m. So it was NFP day. One ranges. It was the 2nd of August. 5 a.m. So it was NFP day. Okay, so we have a long range. Okay, so price exploded. Keep going. It reached. Okay, so we have a long range. It doesn't seem like the. Okay, so price exploded. It reached something. It's a very broad range. So, but I will take it anyway. It doesn't seem like this. Just to journal it and to see if it is actually true. Let's keep on going. It's a very broad range. So, but I will take it anyway. Just to journal it and to see if it is actually true. So like this. Okay, a lot of indecisiveness. We have first take profit, second take profit, and then I will keep into account this level right here. A lot of indecisiveness. I will journal. We have first take profit, second take profit, and then I will keep into account. So this level right here, the 8th of August, 1 p.m. I will journal, and this one too. I will journal this trade. It was a take profit. Got back in on the 8th of August, 1 p.m. Yeah. The range where it was a take profit, only the 50 in reality. It was a long because spread. First take profit took. The range where get rid of this. This is only the 50 in reality. So I'm going to spread this one. First take profit position. Let me get rid of this. This is a new trade. So I'm going to make this one stop position. Take profit, take profit. Take profit right here. So we will copy link. We got the 70 range. Okay. 9 a.m. 15 of August. Take profit, take profit. Good. So we will copy link. We got the 70 range. 9 a.m. 15 of August. Yeah. So we reached the 70%. So 55, 60, 65, 70, long position taken, yeah. So we reached all the three take profit and 70%. Even on the last one were taken. So 55, 60, 65, 70 mark I made taken. So all good. All three take profit and even on the last one were taken because of this. So it's blowing up. Mark I made. Good. So all good. Created a new range. Keep on going. So I can choose to not. Okay. So focus on blowing up. This one range. Good because I didn't like it. Created a new range. So I can choose to not focus on this one range because I didn't like it a lot. So we are 2/3 of the way there to the end of the year, and we are up 3.7. So we are okay, 2/3 of the way there. Pretty nice. Counting the fact that we have only and we are 1-to-1 risk to reward 3.7. So we got back in on the 28th of August, and 5 a.m. Pretty nice. Counting the fact that we have only I will never 1-to-1 ever to reward trade 1-to-1 risk. So we got back in on the strategy 28th of August, 5 a.m. So don't count about it. I will never ever trade 1-to-1 risk to reward strategies. So don't count. The bare minimum I want is at least a 1-to-2 risk to reward, like this. This is the bare minimum I want. The bare minimum I want is at least a 1-to-2 risk to reward. So like this. In this case, this is the bare minimum like this I want for the trade. Let's keep on going. Okay. So in this case, it would have been like this. Let's keep on going. Okay, cancelled. Okay, we have a new range. Okay, cancel. I don't like a lot this market structure. New range. No, I will not take the trade. I don't like a lot this market structure. Okay, so we have a new structure. New structure. No, I will not trade this trade. Retracement. Okay, so we have a new structure. New structure. This is retracement. Take the in and take profit. So we have like this. Oh, let's see. So the first thing we did was to take the profit. So take the in and take profit. I guess we already get into the. So the first thing we did 50% was to take the profit. So let's see with a ruler. I guess we already get into the 50%. Let's see with a ruler. Yeah.
we got in back in on the 18th of September at 1 p.m. Back in on the I'm seeing a lot of 50% trade. I don't like it a lot because it's one-to-one. But you know, it is what it is. I'm seeing a lot of 50% trade. I don't like it a lot because it's one-to-one. But you know, it is what it is. It's a little bit. It's a little bit unpredictable. So we have a new range here. This is a valid range, so I will get into it with a stop order. It's a little bit unpredictable. Okay, we have a new range. This is a valid range, so I will get into it with a stop order. Okay. So this is seem like a stop loss. Okay. We tucked in on the 25th September 1 p.m. This is seem like a stop loss. Okay. We tucked in on the 25th September 1 p.m. Okay, so new range. We are going down. Okay, so new range. Let's keep in mind that, guys, this is like we are going down. 11 days of no trade for this pair, so we should not always keep in mind that, guys, this is like, because look at this. What is this? 11 days of no trade for this pair, so we should not always seek out level setups, because look at this, something like that. What is this? This was a trade. I know, maybe wasn't this level will stop, something like that. This could be. This was a trade. No, it wasn't. Broke structure 50%. This could be. Supporter. Broke structure 50%. Yeah. And this is a take profit right here. We got till the range of. Yeah. No, not the 90 range. Profit. Yeah, we got till the range of. Did not reach that, but the 85, yes. So we have no, not the 90 range. We got tucked in on the. Did not reach that, no, but the 85, yes. October 9 a.m. So we have this one. 24. We got tucked in on the 24. No, 29 of October 9 a.m. long. Yeah. So everything except the 90 range 4 was taken. All three take profit expected. Yeah. So we're Gucci. So everything except the 90 range. This is a valid range, I think. All three take profit expected. So we're Gucci. Valid range. This is a valid range, I think. So limit order. This is a valid range. Not anymore. Right here. Oh well, no. So limit order. Not anymore. Not because more. It reached this liquidity right here. So I don't want to interfere with that anymore. It would have been a take profit because you can always reach this liquidity right here. This is not a big I don't want to interfere with that structure. This is too impulsive. It would have been a take profit. Is it? You can't always win. So this is not a big structure. This is a big. Can you see the news? This is too impulsive. What is it? The USD. Okay. And euro. Can you see the news? So if I go back in time, and euro was there. So it wasn't really having any news. I'm thinking what news was there. wasn't really having any news, I'm thinking. Okay, so no, it was presidential election. Okay, yeah, absolutely. Okay. So coherent. No, it was what I'm thinking. Presidential election. Okay, yeah. Yeah, absolutely coherent with. So we have this range right here. What I'm thinking. See. Sorry guys. Too impulsive. We already said that. So we have this range right here. Is the economical. Sorry guys. President election. Too impulsive. We already said that. One too. This is the. I usually don't watch news. Election, but election. Just for curiosity, I want to see which news moved the market the most. I usually don't watch news, CPI, but just for curiosity, I want to see which news moved the market the most. Other than NFP, so we are in CPI, range. PPI, this president elect range. We already got to my zone, but so we are in a short range. We can go back to it. Is before the range. We already got to my zone, but maybe we can go back to it before the all three take profit. Took cap, tagged in. So we got tagged in on the 15th of November 2020 profit. Let's see. All three take profit. Took 10 a.m. So we got tagged in on the 15th of November 2024 at 10 a.m. We got till the range of 70. We got till the range of 70. Okay, good. So this is a valid range. Okay, good. So this is a valid range. This is taking very long. I don't like it a lot. See, stop loss. This usually when they very long take too long, it's a stop loss. I don't like it a lot, but I know that it's the case. Yeah. So 25th of November. Usually when they take too long, it's a stop loss. I don't know why. -1, but I know it's stop loss. So it was a short position. So 25th of November 2024. -1, 1%, 10 a.m. So it was a short position. I'm taking all of this data because in the future I could create a dashboard right here. 10 a.m. And so I'm taking all of the data I need. In the future I don't know if I will need the time of create a dashboard right here. It's like 1 second per trade, so I'm taking all of the data I need. I don't know if I will need the time of the trade, but it's like 1 second per trade, so I will take that down. This is valid trade. Okay, this is the stop loss. Let's see. Okay. Okay, this is the stop loss. Let's see. Okay. 9th of December, it was at 2 a.m. It was at 2 a.m. It was a long position. Yeah. Okay. It was a long position. Yeah. It's a little bit choppy. Okay. you know. But it's so good because we did end up getting a impulse down. It's a little bit choppy. So it is the range. I don't like this one so good because let's see how it feels. End up getting a I will take a long. Oh, so it is the range. Yeah, I don't like this one. Maybe let's see how it feels. I was wondering if this was liquidity. I will take a long. Oh, it seems like I will take a long. Yeah. I was wondering if this was liquidity, but let's see the section maybe. Yeah, it's swept. But that is a short. This is a long range. Let's see the section maybe. Put a limit. This is a short. This is a long range. Tucked in. So long. Put a limit. Okay, so tucked in a take profit. Okay, so we ended the backtest. This is 23rd of December. Enter. No holidays. Okay, so we ended the backtest. This is 23rd of December. Enter. Imagine getting a take profit holidays on Christmas Day. So something like that now. The end of the year. So one. So imagine getting a take profit on Christmas Day. Something like that now. It was the end of position. Yeah. So 10 AM TP. So we did reach the 70%, 60%. It was a long position. So EP2 TP. So we did reach the no level 70%, 60%. Okay. So let's see the result. It went pretty good. No level. I'm thinking. Yeah. Okay. Honestly, 60% win rate with a 1-to-1 risk to reward. It went pretty good. Pretty good. Yeah, if you ask me. Honestly, so 60% win rate. Delete with a 1-to-1 risk to reward. See how it's chart pretty good, if you ask me. So let's put it on another paper. This one, and see how the chart in input we have only Euro USD. Let's put support on another paper. Let's see. Okay. This is the number of TP. So in input we have only Euro USD. Really good win rate. On support 50% with 1.5 risk to reward. The number of TP. This is and 250 expectancy. Really good win rate. So we have a probability of 0.5 risk to reward of losing 10 and in a row. If we risk 1%. If we risk 2%, the probability of losing 0.5 trade on a row is losing 10%. So we could use in a row some if we risk 1%. On the if we risk 2%, the probability of losing 5 trade on a row is 3%. So we could use some higher risk on the strategy. 5. Let's see on the other. So we have a 387, 46% win rate. Okay. And we have a 4.7, 53% of losing. 449 is the best one. Add all of the other 46% win rate. And we have a 4.5, 53% of losing. If we add all of the other trades, let's see if I can do like something like this. Yeah. Reverse the changes. I broke something, I think. So we'll take this, we'll copy right into this, the changes. Good. So if we take into account, I think, every trade, so we'll take this with the ODUSD and GBPUSD. Good. We see that. So if we take into account every trade with delete this the ODUSD and we see that the expectancy we see that a little because the other pair were not as good as EURUSD. Yeah. But we see that the most high one dropped a little because the other pair still were not as good as EURUSD with a win rate of 41%. But the most high one is
Let's do a Monte Carlo simulation. Still the 25% already. With a win rate of 41%, trade took, and there is 25%, and without the 25 Monte Carlo simulation, 85. We have already, let's see, with 78 trade took, the first with the 25%, and without the 25, 45, we have 85, 80, 80. So, let's see with win rate. So we'll do 45 without the 25% take profit, 0 break-even 45. Is trade 1, 80, balance of 100,000 win rate, average trades per month 45. We saw that conservative. We made 0 break-even trades. Is trade 1, 2.767. If we look at average trades per month, strategy we saw that we see that we told 3 pair 2.767. If we look at, so if you want to multiply it by 3, because we have a 10 pair, we see that it's 24 3 pair the months. We have let's keep 8.42. So even if you want to multiply it by 3, because we have a 25 is a good number, 24 for a total of a year with so 2.1 risk reward. Even I will use 2.1 because I'm not taking 25 is sorry, good number. I will lose 1.4 total of a year because I'm not taking 2.1 risk reward. So I will lose 2.1 because I'm not taking into so we have a maximum. I will lose 1.4 too large because I'm not taking into account commission. So I will add 2 months like this. We have a maximum drawdown that is too large case, and we have a 44% add some in 2 years. It's not that great. We have a maximum drawdown too high for this case. Yeah, we have not looking 44%. The best case scenario is not that great. 189 in 2 years. The worst case scenario is a negative return. It's not looking. So if we take the best case scenario, 41%, 189 in 2 years. And the worst case scenario is a negative return, 2.1. So if we take the reward, this one, right here, 41% per month, we rate total month, let's keep it at 12. And so we have in the worst case scenario, we are up 25% with a maximum drawdown of total month, let's keep it at 12. And so we have in the worst case scenario, we are up 34% with a maximum drawdown of 11.9%. Okay, and 3.7. It's ongoing 12%. Okay, 13.8. So it's always up. It's never down. In the worst case, okay. In the best case, 3.7. 252. 300. So it's always the most possible never in 1 year, right? In the worst case, in 1 year, in the 100% with 252 return on investment, 300. The maximum drawdown is the most possible in 1 year for me. In 1 year is a 100%. We can look to risk return a little bit less, investment, and the maximum drawdown is too high, 20 pair for me, if we can. But yeah, so we have a maximum drawdown of 10%, risk return a little bit less, 100% with a half percent of risk, 20 pair. In the worst case scenario, yeah, so we have a maximum drawdown of 10% with a return on investment of. The best case scenario, we make 212% per trade. With a drawdown. In the worst case scenario, here we only make 37%, one that is fine with 9.4%. The best case scenario, we make 212% as a strategy for drawdown amount. This is the highest expectancy I can get. So 9.4%. The mixture of win rate and risk reward as a strategy for now, pretty good. This is the highest expectancy I can get. So higher, the mixture of win rate and risk reward, but as the data speaks for itself, I would like a little bit of thing higher because the risk reward increase my risk reward data speaks for itself. 2.88, I lose like 12% great rate and thing to do because if I increase my risk reward, I will like get 2.88 of my expectancy. I lose like 12% because I want a higher risk reward. Really a good thing, you know. So this is the backtest I will get, and I hope you guys enjoyed my new take only because I want a higher risk reward in the next video. Not worth it. So this is the backtest, and I hope you guys enjoyed my new take on backtest, and I will see you in the next video.